So I want to share something that I've learned recently about getting access to capital. And it's a trick that surely billionaires and huge, hugely wealthy people are doing to make crazy amounts of money just by having wealth. We think of the stock market and we kind of stop there in terms of the amount of wealth, how wealth is created. But I think it's more about owning assets and then using lending to create wealth. And here's what I learned. So if I wanted to get capital for my business, I can go to an individual investor or I can go to a bank. Ideally, it's with an individual investor, could be a friend, could be a family member, because I can get better terms. A bank is going to be much more rigid. It's going to involve a lot of paperwork. You're probably going to be not working with the best terms. And so if you are a small business, right, trying to get access to capital, it's just better to go directly to an investor if you can. And so when you go to an investor, where are their investments? Well, it's in the stock market, it's in these different securities, it might be in some real estate too, but if you're talking to a wealthy investor, there's a good chance they have a significant amount tied up in the stock market, especially now where everyone's bought into the stock market. It's just going up and up and up, and people are starting to believe that it's going to go up forever. They need everybody into this system. And so everybody is, and everyone's floating at top valuations. Now, trying to ask an investor to sell off some of those assets, decrease that total value of their securities portfolio is a huge ask. And so what you want to do is ask the investor, hey, do you have an SBLOC, an SBLOC, a securities-backed line of credit? Because if you don't, you're not really using the value of your securities portfolio that's been increasingly going up. You can loan against those securities, get capital, lend that out, and then earn a spread on the interest payments. Because what I learned is that these brokerages like Fidelity, they'll lend that money on pretty good terms with zero it's interest only. They only demand interest on those payments because when you think about it, they want you to keep as much principal as possible because they want to earn the interest, as much interest as possible. And so you take out the loan, the investor takes out the loan at 6.5%. They loan it to a small business, and that small business pays back 10%, but it's only interest that they're paying back. So if they took out 50K, they would be paying back like 400 a month on that 50K, giving, say, a small business huge operational runway, huge comfortable cushion, try to grow up from that, but not be hindered to make decisions for your business just on timing. Oh, we need to save money here. We need to wait until next month when this deal goes through. No, you're coming to the poker table with a big bankroll. You know, if you ever played poker, if you try going to a poker table playing Hold'em and you only have 20 or 30 bucks and everyone else came in their bankroll with like 100 plus, you're at a significant disadvantage. Coming to the bankroll is really important so you can make certain bets, because you'll get trapped. Basically, you'll be sacrificing everything on just a few bets, right? You can only lose a couple hands as opposed to lose a lot more before you have a chance to win it back. And so having a cushion is significantly important for any business that wants to grow. And so if you had to pay back through a normal bank, principal plus interest, you would be looking on that $50,000 loan, $1,500 per month, right? That principal you wouldn't be able to deduct from your business as a business expense either, but you do deduct interest as a business expense. So you're paying interest only. It's $400 instead of $1,500, and it's the same amount of deductible, tax deductible expenses for your business. And so it's a crazy win-win. The question is, when would that principal be repaid? perhaps never. Perhaps it's just always worth it to pay off interest only for that 50K that started your whole business. Perhaps you make enough money down the road where you want to pay off that whole thing because 50K doesn't even matter anymore. Perhaps you pay it off in chunks, or you do just slowly. Once you see extra capital, you do pay off some interest because you want to lower your interest payment and slowly kind of be proactive about getting out of it. Wherever that may be, that depends on your personal, strategy. But all to say, if you are confident in your business and you need some runway and you feel like having that bankroll, it would really support your business, give you peace of mind, and also save you money on taxes in the process. If you have a lot of confidence in your business and your ability to sustain it, then this could be a absolutely game-changing finance mechanism that really seems like only billionaires really talk about it. Imagine if you had $1 billion in securities and you loaned 20% of that and made a 3% interest spread on that flow of money. You're making some serious income from doing nothing but click a couple buttons. So man, it's so easy to maintain your wealth once you get significant wealth, because you could just create these income streams from nothing, just from these loans, right? So super interesting. I think there's great opportunity for small businesses, but there's great opportunity for investors who have these huge securities portfolios that keep going up and accumulating. But at the same time, people need to be wary that that might come to an end. There's serious market analysts that predict 70% correction, like total crash scenario, AI bubble crash, blowing up the entire system. But there's also a ton of forces at play that are really trying to hold it together, and it can go way, 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 way more up before it goes down. And at any rate, investors are wide to at least hedge that. They're using that fact that it's going up to create an income stream that's totally separate and diversified and kind of hedged against that. And they have so much leverage to work with because Fidelity, they'll apparently give 50% to 70% of the value of their securities. And so depending on who you're working with, even if you are working with someone that has $1 million in securities, 50K is nothing. That's not levered at all. Like they could take on way more than that. So if someone had 250K, even that 50K is not hugely leveraged to that portfolio. So it's a real win-win situation across the board. And I thought you should know because I just learned about this and it's kind of blowing my mind once you put the pieces together. And so I think a lot of the anxiety for founders comes from the fact that they're always scraping by. And then if they bring on a VC or they bring on an outside investor, then all of a sudden they're not really working for themselves. They're just working for this investor, right? They become the new boss. And so you want to maintain that autonomy. You want to maintain that vision for your company. You want to focus on what matters most for you, who are the expert, who are deeply involved in every part of the process, not some outsider who's, looking in and trying to dictate what direction or what pace the company needs to go. Sometimes you don't need to pour money on something. You need to wait and see. You need to be more organic. Sometimes you do really, when something's working, you really need to make, some bets, pour some money into a project, pour some money into advertising, because you can understand the nuance and the momentum that your business has. And so at any rate, I think we're all trying to, as founders, as people like early, but gaining momentum, gaining customers, trying to optimize for things, trying to think about how AI is actually going to support where they're going in their career. That financing piece is critical. And I think this is just a huge unlock to give those people some boost, right? Some comfort, some peace of mind. That's part of the whole process, right? Like so many entrepreneurs are not getting out there. They have the ideas, they have the capacity, but it's that financial piece that gives them huge angst. And if they can get a bridge on the interest only fact, and also I would add that I don't think a lot of businesses have the right structure in place, especially if they're global, especially if they're like a digital nomad. For example, when I was living in Portugal as a independent contractor, right? Even on the NHR visa, it's 20% tax on your income, pretty much flat. They actually do automatically deduct a little bit, so it's pretty fair. And I think yes, that is fair, but at the end of the day, you don't really have much control on what you can put as expenses on that. So it's really fixed. You grow like you want to grow your revenue at the same time you're reducing your taxable income. And you could really only do that if you have an entity. If you have control over the entity, control over big decisions that you're going to make. And in some ways, it can be over engineering on that, right? You do want to keep it simple, but it's also just matching it with your lifestyle where you can see the merging of lifestyle and work. I think people need, because the starting point is so important, right? If you have the vehicle where you can unlock a bunch of opportunities, for example, taking on this operational financing that you can deduct all your interest payments that give you significant runway, these things kind of feed on itself and can be a viral feedback loop that can get the momentum going. And look, I think you want to build momentum, plus you want to build peace of mind. And that's why I'm so excited and wanted to share this financing approach, the SBLOCs, SBLOC. It, I only discovered it a few days ago. It's only been like 5 days and I haven't got it out of my mind. So it's actually kind of cathartic to just like talk about it here and get people's feedback, because I keep testing the feedback with everybody and everyone is just like, no one's heard of it. They completely agree with the premise and the value proposition. They don't see any holes in it at all, but it's also something that's just not known.